The Pasture and Field Grain Fire Insurance Policy is designed to protect the farmer and rancher from losses sustained due to crop destruction by fire. USDA's Multi-Peril Crop Insurance, MPCI, covers fire from naturally occurring events, but fire caused by mechanical or human activities is not. Pasture and Grain Fire Insurance fills that gap and allows growers the flexibility to insure fields that may not be insured by other means. Here's how the policy works. Andrew is a cattle rancher in California and wants to insure his pasture against possible fire damage. So, he chooses to insure 1,200 acres for $15 per acre. A lightning strike causes 200 acres to burn before the fire is contained. Andrew notifies his agent within 72 hours of the event. The carrier's adjuster inspects and measures the damage. 1,000 acres are undamaged and 200 acres are a total loss. Thus, the claim calculation would be 200 acres times $15 equals $3,000. This payment helps Andrew to keep his business going. Unlike MPCI, policy terms and rates differ among carriers. That is why it's important to have a crop insurance partner, a professional who understands the program and the risks you face in growing your crops.
Crop Insurance Simplified. That's how we treat every policy and every client relationship. For more information about pasture fire or grain fire insurance, give us a call at 559-825-2767 or look us up on the web at www.goldenpacificcrop.com.